Okay, so in this video we're going to be talking about tax on cryptocurrency in Ireland. I'd like to thank taxback.com for sponsoring this video and also giving me the expertise of one of their in-house cryptocurrency experts, and I'll talk a little bit more about them and the services they offer later in this video. And for those of you who are regulars to the channel, you'll probably notice that I'm in a bit of a different background right here, a bit of a different setup, and that is because I've recently moved house. But we'll talk about that more in upcoming videos. So over the last week or so, I gave you guys an opportunity to send me in some questions in relation to cryptocurrency tax in Ireland, and what I've done is picked out the most common questions and also some ones that I thought would provide some value to you guys as well. So cryptocurrency is a relatively new form of investing, and a lot of kind of tax rules are still quite unclear for many investors, but that's why I brought these questions to the tax expert over at taxback.com, and hopefully this video can provide you with some real value. So guys, if you appreciate me going out getting the answers to these questions, if you could take a second to drop a like on this video, it only takes a second and it really does help out the channel a lot. So the first and most common question was, if I have my cryptocurrency, let's just say for example Bitcoin, and I transfer that to something like Ethereum, or I transfer that to something like USDT or back to Euro, is that a taxable event, or do I have to actually withdraw the funds from my cryptocurrency account? And I do have some bad news for people when it comes to this. Anytime you change that for another asset, whether it be just back to fiat currency, whether it be to Bitcoin to Ethereum, Ethereum to Cardano, anything like that, that is a taxable event. It doesn't have to be withdrawn from your account. Just when you make that exchange of one asset for another, that is a taxable event. And that will fall under CGT, or capital gains tax, in Ireland. And the current rate for that at the time of recording this video is 33%. So yes, I know quite a high percentage there, but tax on profits is still better than tax on nothing. You're still making profits at the end of the day, but unfortunately you will have to part with 33% of your profits. So let's go over an example here to make sure it's clear for everyone. So I would like to also point out that you do have a capital gains tax exemption of 1,270, where you can make that much in profits completely tax-free. But for this example, let's just put that to the side right now because I just want to keep this quite simple. So let's say for example that you invest 1,000 euro into cryptocurrency. And for this example, we'll use Bitcoin. So that 1,000 euro that you invested in Bitcoin has now grown to 1,500 euro. And let's just say you haven't done anything with it yet, you've just let it grow. So that means you have 500 euro of unrealized profits. Now let's say that you transferred that 1,500 euro, all of it, over to Ethereum. That means that your once unrealized profit of 500 euro now becomes a realized profit once you change from asset to asset. So once you've done that transaction, that 500 euro is now taxable. So that means when you make that transaction of 1,500 euro from Bitcoin to Ethereum, you'll have to pay tax on the 500 euro of 33%, which will come out to 165 euro. So as I mentioned, you do have your capital gains tax-free allowance of 1,270. So if we're still running with that same example, what you would do is you would have your 1,270 minus your 500 of realized profits, and that would leave you with 770 euro of your capital gains tax allowance to carry forward with you throughout the rest of the year. Now here's where things get a little bit complicated, and let's just say that you had that 1,500 in Bitcoin and you only wanted to transfer half of that to Ethereum. How would the tax work then? So what you would do is you would basically half your profit. So as I said, let's say you had 500 in profits on that and you only moved over 750. 250 of that would be considered a taxable profit, meaning that you would end up paying 82 euro and 50 cent in tax on that transaction. So hopefully that first example made sense. Go back and watch it maybe one or two times if it wasn't quite clear to you. But in summary, anytime you do transfer one cryptocurrency to another, or one cryptocurrency back to your normal currency, your normal fiat currency, that is a taxable event. You don't have to take it out of the brokerage, and you will have to pay capital gains tax of 33%. But do remember that you do have your CGT exemption as well. Something to note here as well is that your CGT exemption applies to all your capital gains tax. So that means if you're investing in stocks and you're investing in cryptocurrency, you don't get two different exemptions. You just have the one 1,270 euro exemption across both asset classes. So another question in relation to this is there any fees that you can write off in relation to your profit to reduce that taxable amount? And the good news is yes. So for any fees associated with acquiring or disposing of the assets, you can actually write them off. And another good news, if you're getting someone like taxback.com, for example, to take care of your tax for you, you can actually write off the cost of their fees from your profits as well, reducing your taxable amount when it comes time to pay the revenue. The next question that came up quite a bit was in relation to trading cryptocurrency opposed to investing in cryptocurrency. So I was told that normally when it comes to cryptocurrency, they're generally considered under capital gains tax no matter what you're doing with it, but there are certain circumstances which you need to meet in order for it to fall under trading cryptocurrency. The difference between the two is that investing in cryptocurrency falls under capital gains tax and trading cryptocurrency falls under income tax. So this gets a little bit complicated, but it's basically under something called badges of trade, and they are as follows: the volume and frequency of the activity, the motive, the level of organization, the risk, and then the commerciality of it. But generally, unless you can justify it by satisfying the criteria I've listed here, your buying and selling of cryptocurrency will be classed as capital gains tax and not as income tax. So essentially, I couldn't just decide today, okay, this transaction I'm going to be doing is going to be under trading, and the transaction I do tomorrow will be under capital gains tax. For me, it would just all be under capital gains tax unless I had set myself up to be a trader. Now I know that can be a little bit complicated, and I'll try to do a separate video going over this because I don't think I'll have enough time in this video to go over all the ins and outs. And we'll cover off each of those 5 badges of trade in that separate video as well and just dedicate some proper time to that. The next question that arose was when it comes to staking of cryptocurrency. So this is essentially where you're earning an interest rate on your cryptocurrency. You can often freeze your cryptocurrency, or simply by having it in one of your cryptocurrency exchanges, you could be earning an interest rate on that. Each of these interest payments will be liable to your marginal rate of income tax. So it's kind of like dividends. It's nothing to do with capital gains tax. This would be classified as income tax. So that means if you have 1,000 euro, let's say in Bitcoin, and you get 10% of that, so you end up getting 100 euro in interest by staking your cryptocurrency. That means that 100 euro will be added to your income tax and taxed at your marginal rate. The next question that arose was when you spend your cryptocurrency as part of a debit card or credit card scheme. These aren't too popular just yet, but I've seen that BlockFi have recently come out with a crypto credit card, so I thought I'd cover it off in this video as well. So first of all, when we're looking at a credit card, essentially that is a loan that you're taking out. It's not your own cryptocurrency you're accessing, it's a loan from BlockFi. Essentially that's how credit cards work, whether it be cryptocurrency or fiat currency. So here's how it would work when you're using a credit card to pay for stuff using your cryptocurrency. So let's say, for example, you initially invested 500 euro into Bitcoin, and now that has grown to 1,000 euro, and you haven't touched it yet, you're just leaving it sit there. So that means that you have 500 euro in unrealized profits. You go ahead and you spend your credit card, you do all these different transactions, and at the end of the month, they add up to 500 euro. Now it comes to the time to pay off your credit card, of course, and you're going to pay it off with the cryptocurrency balance that you have. So that means that you would take 500 euro of your Bitcoin to pay off the 500 euro in Bitcoin that you spent with your credit card. So that 500 euro will actually need to be taxed because it's some of your gains that you've made on the initial 500 euro investment. So that means that the 500 euro is 50% of your full position. That means you take your profits on that full position and multiply that by 50%. And that will give you, in this case, 250 euro. So that means after you've paid off your credit card at the end of the month, that means you have a tax liability of 250 euro, which you'll have to pay 33% capital gains tax on. So that means you'll end up paying 82.50 euro in total to the revenue for that month of transactions. Again, this can be quite a complicated scenario, but just go ahead and watch it back and try to pay attention to all the figures. And if you have any questions, please let me know in the comment section below and I'll do my best to answer them for you. Now, when it comes to debit card transactions, I'm not actually aware of anywhere that does a cryptocurrency debit card right now, but I'm sure there is some out there. But essentially at the time of each purchase, that is when you're actually transacting your cryptocurrency. So when you're using your debit card, every time you do a transaction, that will come out of your own cryptocurrency balance. It's not using a loan like what you do with the credit card. That means at the time of each transaction, you will have a taxable event. So that is pretty annoying and be pretty complicated to work out your taxes in this because you'd have to calculate it at each time of the transaction. Let's keep it very simple. For example, you invested 50 euro in Bitcoin. It's now grown to 100. So you have 50 in unrealized profit. You go ahead and use your debit card to spend 50 euro. That means you would take your profit, which is 50, divide that by 50% as well because you spent half of your total balance. And that would leave you with a total taxable amount of 25 euro on that transaction. Multiply that by the 33% for capital gains tax and you're left having to pay 8.25 euro on that transaction. So for me personally, it doesn't make sense to use something like a debit card for cryptocurrency transactions in order to use your cryptocurrency. I think it's just a bit of a crazy way, especially if you're using it regularly, because there's a lot of tax calculations that you have to do in order to be able to make sure you're compliant with the Revenue Commission. The credit card idea is a little bit better because you only have to do that tax calculation as a once-off when you actually pay down your balance at the end of the month. But for me, I won't be using that one yet either. Some people have asked as well, if you buy, for example, your cryptocurrency on Revolut where you don't actually own your private keys, is that still considered owning the asset and having to pay the capital gains tax? And the answer to that is yes. Another question that also came up was in relation to mining cryptocurrency. How exactly does that work? And when it comes to mining, that'll actually fall under income tax, not capital gains tax. So that means, let's say for example, you set up your mining rig, you go ahead and mine €100 in Bitcoin, that will be added to your income tax at the end of the year, and you'll have to pay your marginal rate on that. Again, there are some fees you can write off here. For example, acquiring the equipment in order to do the mining. You'll be able to depreciate these over 8 years at 12.5% per year. And you can also expense your electricity costs in relation to the mining as well. So another question that came up, a very popular one, was what if I invest in Ireland and then I move country to a different place with a different capital gains tax rate? What would I have to do in that situation? And just before I get into that, let's just hear a little bit about our sponsor for this video and what services they offer. So taxback.com specialise in getting you your tax back, and their average Irish refund is €1,076 per customer. So if you've recently been married, have dental or medical bills, or if you're working remotely, taxback.com can help you get your maximum refund with the minimum amount of hassle. As well as that, if you're dealing with investments such as shares or cryptocurrency as well, or even if you're a landlord, taxback.com can help you with the self-assessment and make sure that you're claiming all the allowances available in them areas as well. You can even visit their website. I'll leave it linked down in the description below, the first link down there, and you can actually get a free refund estimation over there. They also have 24/7 support on the website, so if you need anything, just reach out to their live chat. So there could be quite a bit of money waiting for you if you haven't filed a tax return before. And in the case of stocks or cryptocurrency, any of the fees associated with a service like taxback.com can also be written off against your taxable profits as well, so that can reduce that bill there. So definitely worth checking them out. As I said, first link down in the description below. Okay, so let's get back to that question of if you're a resident in Ireland and you've made your investments in Ireland and then you move to a different country. A few people suggested Portugal that have a different capital gains tax rate over there. How will that work when it comes to selling your cryptocurrency as well as your stocks and shares? So what I've been told back is that the capital gains tax liability in Ireland depends on if you are a resident in Ireland at that time. So let's say for example, if I just moved to Portugal right now, I'd still technically be a resident in Ireland, and that means even if I am in Portugal, if I sell them stocks, then I will owe tax in Ireland on them assets. Now in the case that people are not residents in Ireland, so let's say in the reverse, someone comes over to Ireland and is living here, but they still are resident in their own country, they will only have to pay CGT on specified assets only, and that includes things like land and that, not their shares or investments that would be paid in their own country. And then finally, if you're not a resident in Ireland and if you're not domiciled in Ireland, so if you're a resident, let's say of Portugal, and you're domiciled over in Portugal as well, you will only be subject to CGT on specified Irish assets, as I mentioned, things like land. But your shares and your investments, you would only have to pay tax in the country that you are a resident in. So I'm going to leave all them different scenarios I covered in relation to that down in the description below if you guys want to have more kind of an in-depth read on them there. But again, I think that specific scenario is one that we will explore in a bit more detail in a future video because it's definitely an interesting concept. Now when it comes to capital gains tax, there are a few key dates that we need to keep in mind. And the first one is if you sell your shares between the 1st of January, let's take this year for example, so between the 1st of January 2021 and the 30th of November 2021, you need to pay your capital gains tax by the 15th of December 2021. And I've got a few questions before asking how do I know how much to pay. That is up to you to calculate based off what I've said in this video. You can use that as an example of how you calculate your taxes for this. And if there is any ambiguity, make sure you do reach out to any professional services to make sure that you're making them calculations correctly. Again, there's services like taxback.com that can help you with that as well. The other key dates are if you make a sale between the 1st of December or the 31st of December 2021, you would need to pay the tax, the CGT tax on that by the 31st of January 2022. So that means you have about a month to pay your CGT there for sales within that period. And then finally, you'll have to file the tax return for 2021 by October 2022. So guys, that wraps it up there. I think it was quite a long video, but there was a lot to cover off in relation to tax on cryptocurrency in Ireland. If you guys are interested in a free share in the stock market as well, go ahead and check out the links to Buck Zero in the comment section below. Again, I'd just like to thank taxback.com for sponsoring this video and allowing me to chat with their in-house cryptocurrency expert to allow to make sure that I get the most accurate information in this video as possible. Please do remember that I am not a financial advisor and I'm not a tax expert, so if there are any other questions or you're going to do your CGT yourself and you have any ambiguity, make sure you do reach out to a tax specialist. As I said, if you enjoyed this video and you appreciate the effort that went into it, if you could take a second to drop a like on this, would very much appreciate it. If you have any further questions around this, let me know in the comment section below and I'll see what I can do in terms of getting an answer for you guys. And if you are new around here, make sure you do subscribe to the channel as well for lots more content. Thanks for watching and I'll catch you in another video.